All right, good evening, afternoon, or good morning, depending on when you're watching this. My name's David Whiteley with ULTradez. Thank you for stopping by today. If you're new to the channel, this is a channel where I'm documenting my process of attempting to get 20 Apex accounts past the evaluation phase and fully funded. So every day I jump on here to show you some of the trades that I took, and today I think I'm going to do something a little bit different. Rather than walk through every trade and why it was good or bad or what I could have done better, I think I'm going to focus on three things. So stick around to see what those three things are. So first of all, I'm going to show you the A+ setup that I took. I'm going to show you an A+ setup, in my opinion, based on my trade plan, an A+ setup that I didn't take. And then I'm going to show you a lesson that I learned. Okay, so we'll follow that process and see how it goes. So let's start off with the P&L today. So I did end up red today. So three red days in a row. We're not off to a great start. It shows 358 here. So this is kind of day 3. It's not day 3 in each account. Some of the accounts it might be. But it's I kind of recalibrated. Reset Monday is kind of day 1, so that's where this tracking path started. And so where this would have completed day 3. I show 358 because that was the largest loss that I had, and that was in this account. And it was because there was an open range break that I was just itching to take. I didn't have a lot of faith in it, but I had this. I guess it was a FOMO trade, right? Fear of missing out. So I thought, well, I'll just put one account on it. I'm not going to put everything on it, and I'm glad because it did lose. So that's why this one's a little bit higher. Everything else is at 304. These two are at 123 because I did double the contract size in the $50,000 accounts, with the exception of this one because the trailing stop is much tighter here. So I reduced this guy to 1 as well. So that's where we're at. So overall today was, it was a weird day. I don't know. I started out with a loss, which was the lesson that I learned. So I'll show you that trade first. And then, I don't know. It just felt like a day where nothing seemed to go right. And the last trade that I made, was fairly early in the day. And it was a winner. And so it brought me back up to 304. And so I called it a day there. There were some other opportunities, but I wasn't, my state of mind was not in a position where I thought it would be beneficial. And I kind of have this $300 threshold set for myself for these accounts that, I really don't want to trade past a $300 loss. It would be better to reset for the following day. So that's where we're at. We'll see what tomorrow brings. So let's start off with the lesson trade. Okay. So this is a trade that I knew I shouldn't be taking, and I'll tell you why. I can't tell you why. I guess I can tell you why I did take it, but this was the lesson. So this is at 3:15 or 3:20 in the morning, Central Time. And maybe this was part of the reason today was kind of a weird day because I got up super early. I normally don't get up this early, but I was looking back, and the London Open for me starts at 3 a.m. And so generally between 3 and 4 or 3 and 4:30, there's good setups that happen, but they happen slower. You got to be patient because volume is higher during that time than it, earlier than that. You can see it does pick up at points, but it's not high volume like we see, after, 8 a.m. Central, 7 Eastern. So this was the trade. So I'm kind of groggy in the morning. Watching this price come down, it drops below. And what I'm seeing here is at this point in time, this gold line, which is the 9 EMA off the 5-minute time frame, was sharply down. Okay, it was almost touching this 21 SMA. And I know from looking back at the charts, when these things cross early in the morning, if there's a sharp cross, this price will drop. Okay, so that's what I was anticipating. And when price broke down through, this one bar broke through both moving averages, It broke down here lower than it's been in some time, okay, which is generally a sign that we could come down. So I'm looking for this to come up for a retest, and this is what I was seeing. Was I saw this bar come up for the retest. Again, this EMA was almost, I mean, it was basically touching this red line here. That's how sharply down it was, you know, in the moment at the time that this candle came up. And so I said, well, that's close enough. That looks like a retest to me. So I got in at the bottom of this candle. Now, here's the big problem with this trade is there's this gold line right here that's in the way. This is the overnight open. Okay, this is the opening price. So if you follow it back, it's also the high. It's also the high of day right here. So this is the point at which price opens at 5 p.m. So after that hour gap, when it shuts down, everything kind of settles out, and then it opens again. That's the opening price. This price level is a significant price level, especially, well, for most things, but especially in oil. And one of my trade rules is do not trade into the overnight open. And I ignored that rule and I paid for it, right? So I got in here. I'm thinking, well, we've crossed it before, so maybe it's weaker. Plus, we're coming down really sharply, and I was just picturing these candles just rushing down after these moving averages crossed. Didn't happen. Price came down, gave me a little bit of hope, and then woof, it just went the wrong way. Boom. So there's my first loss. My full position size on this one, well, I think 2 contracts, right? 2 contracts in my small account, 4 contracts in my big account. Big loss. So that was kind of a feel bad moment. So that was my, knock on the head that, dude, you got rules for a reason. Follow your rules. Trade your plan. Well, I got back in the game. I shook it off. And I did have one trade here that worked. I ended up half of it. I made a little, half of it stopped me out. So I made a little bit there. This one worked out, but at this point I was down to 1 contract because I didn't want to take another 2 contract loss. So I made up a little bit of what I lost here. I had other trades, but now let's move to the A+ setup that I took, which again was in oil. So, I mean, this wasn't altogether a bad day. All right. Now what I've done here is, all right, let me get this kind of zoomed up here so we can see what we're doing. All right. The circle here is the entry. Okay, I'm going to go ahead and delete that now just to get it out of the way. All right. So where are we at in the day? Well, this is the opening range from 8 a.m. Central to 8:15 Central. All right. Prices come up. It's hovered at the top. It came down below the moving averages. It came up above the moving averages, and in one candle down up. Okay. So what we're looking at is I'm looking for this to come back and retest this 9 EMA, this 5-minute 9 EMA, this gold line right here. It does. All right. So price pushes really hard up and it just flies down. What do they say? Price takes the escalator up and the elevator down. So this little doji candle here is the one that pierces the line. So my entry is 1 tick above that candle, which is right here, and I get in. Okay. And I do get out for 10 ticks here, which is what I'm doing. Now this was only 1 contract. I wish it would have been more. But I followed the process. It worked. What I wanted to show you though is this green line here, which matches the opening range line. So you probably can't see it very well, but right here is the price in. And we expect these trades more often than not to go 20 ticks, sometimes more, sometimes a little bit less, but 20 ticks on average. And so this red line here would have been 20 ticks. So it was choppy. I mean, this candle comes way down. But if you look at price coming to this point, I mean, these are big candles. Okay, so, I mean, this is a huge candle. And it's at 849. So I don't know what drove this candle, but, when price is choppy, price is going to be choppy. And so had I been patient, I could have left my stop loss down here and just let it run up to the profit target. It would have taken 1, 2, 3, 4, 5, 6, 7, 8 minutes. Hit 20 ticks. Done. Okay. So that is the A+ setup, or one of the A+ setups that I took. All right, let me show you an A+ setup that I did not take. This is in the RTY. Here, this is at 9:50. I mean, there are some other trades, but this one is at 9:50 Central Time. All right, so where are we at in the day? Price came in, it dropped, and then it kind of trickled up here into no man's land, dropped again. Okay, so at this point, we've come out of the open range. But the important point is we have a new low of day right here. All right, the last time price is kind of blowing through this 9 EMA, this 5-minute 9 EMA, the thick gold line. And so I don't trust it as much, okay? That's one thing I look for. And you can kind of even see it pre-market. If pre-market is really holding to that line, then then that's a good sign. If it's not, then we want to be cautious. However, price, so let's see, where were we at? Sorry, I lost my train of thought. So we have our low. I'm looking for price to come up and touch this red line, or well, the gold line or the red line. The gold line, it pushes through. All right, so there's really no trade here. The trade is at the red line. And if we look at the red line, okay, so here's where price originally crosses below the moving averages, below this red line. It does come up and touch, so here's touch number 1. All right, and that was way back here early morning. And then this is only the second time we've been to the red line. And since that first time was so long ago, I don't even know if you'd really count it as the first time, but it's not the third time. That's the important thing to note, because we do not take the third trade, even though actually it happened here kind of, so it sort of worked. But the key components of this trade is we have a pivot low, and then we have a pull back to the red line. It doesn't matter that it's choppy a little bit coming into it. All right, we just want to be on the right side of the trade in this case, because this is a slower moving average. It does take time. All right, price gets there, it pierces. So we would have our order holding above this candle, or below this candle. I'm sorry, 1 tick below this green candle. The next candle forms. It's still, that wick still comes below this 21 SMA, below this red line. So we move our order to 1 tick below that, which if you can see in that green is 1946 even, or well, maybe one off, but anyway, I can't even read my own numbers. Yeah, 1946. All right, and we're looking for 20 ticks. 20 ticks is this red line right here. Actually, that's 21 ticks, so a little bit before that. So there you have it. This one rushed straight down. You would have had it in 1, 2, 3, 4 minutes. You would have got it. I mean, if you'd have been patient, you could have held on. But you got your 20 ticks. So that's the A+ setup that I did not take. And again, the only reason I didn't take it was because I wasn't watching RTY. Had I been watching, I don't know if I would have, I'd like to say I would take it, but looking back on the day, that is an A+ setup that I would have taken had I seen it. All right, so that's my trade report for today. Hopefully you found that information useful. If you did, we'd love for you to hit that subscribe button, and we'll see what we can bring to you tomorrow. Remember, until then, trade safe, trade your plan, and have a great day. We'll talk to you tomorrow. Bye-bye.